The FDIC shut down Citizens Bank of Sac City on Friday. Its 2 branches reopened today under Iowa Trust and Savings Bank, which took over Citizens' assets. Examiners reported significant losses tied to out-of-state loans tied to a specific industry.
Hi, welcome back to Joe Blogs. Well, as you've just seen, Citizens Bank Iowa is now the 5th official banking failure in the USA in 2023. And earlier this year, we were talking about some really big banks that were failing. Silicon Valley Bank, First Republic, Signature Bank being some of those that had hundreds of billions of dollars of assets, and all of which had a loose relationship with the crypto markets, which were in free fall at that time. Now, Citizens Bank Iowa doesn't have anything to do with the crypto market, so this isn't isolated to what's going on in a small part of the financial world. This is more to do with a genuine banking failure. So will this bank be the first of the dominoes that starts to collapse? Will we see lots of other bank failures during the rest of 2023 and into 2024, or is this an isolated case? Well, in today's video, we'll have a look at the details of Citizens Bank Iowa, go through exactly why that bank failed, and whether or not there's going to be any systemic risk, any knock-on implications. We'll also have a look at what's been happening with bank failures in the USA over the last 15 years, dating back to 2008, which was the global financial crisis, which was the worst period in history for bank failures. We'll then have a look at the size of the banks that have failed and see whether or not there's a trend starting to emerge. And then finally today I'll wrap up with my summary as to whether or not I think there is a chance that a new banking financial crisis could be starting right now, or whether Citizens Bank Iowa is just a one-off event. But before we get into all of that, I'd like to say once again, thank you so much to everybody that's bought me a coffee or sent me a YouTube super thanks, particularly around the new Cup of Joe concept that I've been trialing over the last week or so. That seems to have gone down quite well, so that will be back. Keep watching for that. And if you'd like to support the channel, please have a look below where you'll find links to my Patreon channel, where you can see other videos that are not being posted on YouTube and also get early access and avoid the adverts. But if you don't like Patreon and you would like to support the channel, you'll also find the Buy Me a Coffee as well as YouTube super thanks and membership scheme. Citizens Bank of Sac City, Iowa is now the 5th US bank to have failed in 2023. The bank entered into FDIC receivership on Friday the 3rd of November. In its official press release, the FDIC said, Citizens Bank Sac City, Iowa was closed today by the Iowa Division of Banking, which appointed the Federal Deposit Insurance Corporation as receiver. To protect depositors, the FDIC entered into a purchase and assumption agreement with Iowa Trust and Savings Bank to assume all of the deposits of Citizens Bank. The 2 branches of Citizens Bank will reopen as branches of Iowa Trust and Savings Bank on Monday during normal business hours. This evening and over the weekend, depositors of Citizens Bank can access their money by writing checks or using ATM or deposit cards. Checks drawn on the bank will continue to be processed. Loan customers should continue to make their payments as usual. Depositors of Citizens Bank will become depositors of Iowa Trust and Savings Bank, so customers do not need to change their banking relationship in order to retain their deposit insurance coverage. Customers of Citizens Bank should continue to use their existing branch until they receive notice from Iowa Trust and Savings Bank that it has completed systems changes to allow its branch offices to process their accounts as well. As of September 30th, 2023, Citizens Bank had approximately $66 million in total assets and $59 million in total deposits. In addition to assuming all of the deposits, Iowa Trust and Savings Bank agreed to purchase essentially all of the failed bank's assets. The FDIC estimates that the cost of the Deposit Insurance Fund will be $14.8 million. Compared to other alternatives, Iowa Trust and Savings Bank's acquisition was the least costly resolution for the DIF, an insurance fund created by Congress in 1933 and managed by the FDIC to protect the deposits at the nation's banks. Citizens Bank is the 5th bank to fail in the nation this year. The last failure in Iowa was Polk County Bank, Johnson, Iowa, on November 18, 2011. It was subsequently announced that the failure of the bank was the result of soured loans made in the commercial trucking industry. In a news release, the Iowa Division of Banking said Citizens was declared insolvent when bank examiners identified significant loan losses that had not previously been identified by the bank. It said the bank had made a concentration of loans to a single industry, which Iowa Superintendent of Banking Jeff Plagg acknowledged was trucking, outside its Sac City territory and outside of Iowa, and incurred heavy losses on some of those loans. However, he declined to name the specific trucking firm or firms involved. Plagg said the failure, despite being the fifth US bank this year, was isolated and that Iowa's banking industry is stable. He said that at the end of the second quarter, 96% of Iowa's banks were rated in the top 2 tiers of 5 for rating banking health. A Time magazine analysis in September said rapid expansion in the trucking industry had resulted in overcapacity, leaving some smaller scale companies struggling. However, Plagg said that the bank failure does not signal widespread problems in the trucking industry. We aren't seeing problems with trucking business portfolios surface in other banks, he said. He noted, however, that while a single office bank like Citizens would typically have a territory of about 25 miles surrounding its core community, it had been making loans outside of that range and also out of state. Once the bank was taken over by regulators, Plagg said the transition to the new bank took place quickly. He said there was a lot of interest in acquiring the bank, and Iowa Trust won the bidding. This chart shows the total number of US bank failures dating back to 2008, both by number of banks and also by total assets of all of those banks combined. And the first thing that jumps out at you when you look at this chart is the total assets of the 5 banks that have collapsed in the USA in 2023. As you can see, the combined assets of the 5 banks is $553 billion, or over $500 billion, and this figure dwarfs all of the other years shown on this chart, including 2008, 2009 and 2010, which was the height of the global financial crisis when banks and financial institutions got themselves into severe liquidity problems and hundreds of them went bust. And the $553 billion of assets for the 5 banks that have collapsed in 2023 compares to the combined total for the previous 15 years of $695 billion. And I think when you look at that sort of comparison, you can see why there are concerns about what has been happening in 2023. Now, the other interesting thing to look at on this chart is the number of banks that have failed. In 2008, which was the start of the global financial crisis, 25 banks with combined assets of $365 billion failed. In 2009, the number of banks increased to 140, but interestingly, the total assets reduced significantly to $170 billion. In 2010, the number of banks increased again to 157. However, the total assets that they represented fell to $92 billion. In 2011, we saw 92 banks fail with total assets of $35 billion. 51 banks failed in 2012 with combined assets of $12 billion. 24 failed in 2013 with combined assets of $6 billion, and 18 failed in 2014 with combined assets of $3 billion. So when you take a step back and look at this chart, you can see the 7-year impact of the global financial crisis. In 2008, some really big banks failed. There were only 25 failures, but on average, those 25 banks had assets of around $15 billion each. The number of banks failing actually increased in the following 2 years. However, the average size of those banks reduced significantly to $1.2 billion in 2009 and $585 million in 2010. So basically what this chart is showing is the ripple effect of the global financial crisis. It had its biggest impact in terms of the size of the assets in 2008, but the knock-on implications carried on for the next 7 years, and we continue to see a high rate of bank failures. If you now look at the chart from 2015 onwards, you can see that the number of bank failures has dropped to less than 10 in every single year, which represents more of a normalised situation. There were 8 bank failures in 2015 in the USA, 5 in 2016, 8 in 2017, and in the 5 years between 2018 and 2022, there were only 8 bank failures and 0 in both 2021 and 2022. So 2023 is the worst year in terms of the number of bank failures since 2017. However, is significantly worse than all of these years in terms of the total size of the assets involved. And this chart provides more details of the banks that have failed over the last 6 years in the USA. And what this table shows is that in 2023, there were 3 huge banks in terms of their assets that failed. Silicon Valley Bank failed on the 10th of March and had total assets of $209 billion. Signature Bank failed on the 12th of March with assets of $110 billion, and First Republic Bank failed on the 28th of April with total assets of $233 billion. Now, interestingly, the next bank failure in the USA didn't take place until the 28th of July, when Heartland Bank failed with assets of $139 million. And as we've discussed in today's video, the most recent failure occurred on the 3rd of November, when Citizens Bank failed with total assets of $66 million. So what's the summary and conclusion today? Well, I wanted to post this video because news of another bank failure in the USA is relevant to all of us, because what's going on in the financial world in the USA can definitely have a knock-on impact to the rest of the globe. So if we start seeing banking failures occurring in the US, it's extremely likely that we could see similar things happening in other countries, and that's how things start to develop. But what we've seen from today's video is that the issues at Citizens Bank Iowa were really isolated to what was happening in that bank. And let's face it, this bank was extremely small. It only had assets of $66 million, which in banking terms is a minnow. It only had one branch in a small town called Sac City, which has a population of around 2,000 people. And in fact, the whole state of Iowa only has a population of around 3.2 million. So we are talking about a very small financial institution in global terms. But I think the details of why this bank has failed are interesting, because they failed due to old-fashioned banking problems. They overextended themselves to one particular industry, trucking in this example, got themselves into difficulty, started to incur lots of losses, and got to a situation where the regulator said, actually, your losses are now greater than your assets, they're unsustainable, and so you're going to have to go into liquidation, and somebody's going to have to come in and clear up all of this mess. So the big question really is, was this down to poor decision making just at this bank? Or is this the start of problems starting to appear in the trucking industry in the USA? Well, if we take a step back and have a think about trucking is a very competitive market. There's always lots of firms vying for the business, and so you tend to work on quite thin margins. And what we've seen over the last 18 months is that the price of oil shot up following Russia's invasion of Ukraine. It stayed at an elevated level for a long period of time, started to come back down again at the back end of 2022. However, as a result of the actions taken by OPEC+, where they've deliberately reduced the supply of oil, we've seen oil prices going back up. And when you look at the long-term average, it's higher than it has been over the last 5 years. So from the trucking industry's perspective, their main cost, their main variable cost, has gone up significantly, and that's going to eat into their margins. So what we're seeing here is that these trucking firms have faced a large increase in their main variable cost at a time when the market is still very competitive, so people are still having to compete. And in a business like trucking, you've got high fixed costs because you have to buy your truck, and that might cost you $150,000, $200,000. And so you've got to do a lot of business to pay that back. So you need to be constantly on the road. So what you don't want to do is miss out on a tender or some sort of bidding process. So what we're seeing potentially is that firms are having to cut their margins. And when oil prices start going back up, that's going to mean that those companies are going to struggle to pay their debts. And if we now think about what's been happening on the debt side of things, over the last 18 months, we have seen a lot of interest rate increases in the USA and other countries around the world. And of course, what that does is it increased the cost of all of the debt. So any new debt that's been taken on over the last 18 months, or any old debt that has a variable interest rate, is going to see higher rates of interest being applied against it. So that means that companies are now paying higher rates of interest on those loans, and that's putting further pressure on these companies. So whilst the failure of Citizens Bank Iowa may well be an isolated incident that's purely related to the decisions that that bank was making, if this actually is a reflection of the fact that the trucking industry is one of the first starting to show signs of stress as a result of the fact that oil prices have gone up, but also the cost of debt has gone up, and because many of these companies are taking finance to pay for the vehicles, that's putting pressure on their cost base at a time when their income is coming down. And that's when you get a potential for a wide-scale failure in an industry. So there is a potential that this is an early warning sign that what's happened at Citizens Bank Iowa tells us that problems are starting to arise in the trucking industry, which will have a knock-on impact to lots of other businesses, because trucking is generally needed to transport things from A to B. So companies are paying for that transport. So if trucking companies are getting into difficulty, that potentially reduces the amount of competition, pushes up the price of trucking, and therefore will pass on higher costs to other businesses. So you can start to see here how the knock-on implications of things like movements in the price of oil and increases in interest rates as a result of trying to combat high levels of inflation, which is what's been happening in the USA and other countries over the last 12 to 18 months, have an implication for businesses on the ground, because they're seeing their cost base going up on both sides. The price of oil is going up and the price of their debt is also going up. And if the global slowdown that's been happening for the last few months continues for the next 3 to 6 months, what will also happen is the level of business generally will drop, because there'll be fewer consumers, less demand, and therefore companies won't need to pay for as much transport. And so the competition in trucking could potentially get worse if the number of contracts available decreases. So that means that trucking firms will need to bid even more competitively to make sure that they get those contracts, meaning that they'll have even thinner profit margins. So when we get a fluctuation in oil prices, like we're seeing at the moment, partially because of what's happening in Israel, there is a real risk that we could have a lot of companies being in a position where they can't afford to pay their debt, and therefore they become insolvent. And that means that the banks then lose money, and the banks themselves are at risk of failure. So when you take a step back and look at the 5 banking failures that have occurred in the USA in 2023, the 3 biggest of those by far were all related to crypto in one form or another. Silicon Valley Bank, First Republic Bank, and Signature Bank all had direct relationships with companies that were heavily involved in the crypto industry. So you can really put what happened to those banks down to what was happening in the crypto markets, because earlier this year we saw the crypto markets nosediving. All of that actually started back in 2022 when we saw lots of crypto companies failing, the most famous of which was Sam Bankman-Fried's FTX, which went bust in November. However, the fallout of that continued for a number of months, and those banks found themselves in a position where they were completely illiquid. The banks had put lots of their assets into government bonds that was long-term money, and as the Fed started to increase interest rates, the price of those bonds started to fall, and when those banks came under a cash call, they were forced to sell those bonds at a loss, and that's why they all got into financial difficulty. But if we look at the other 2 banks on the list, the most recent failures, they were related to business decisions that those banks have made. And the big question is whether or not the losses that those banks incurred were down to poor decisions that were made at those individual banks, or are they a reflection of various problems that are now starting to emerge as a result of what's been happening over the last 18 months, firstly with inflation, which pushed up costs, and now secondly with borrowing costs because of the rising interest rates. And if these failures are down to wider problems, then there is a real potential that we could see more banking failures over the next 3 to 6 months. So hopefully you found today's episode useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.